This interview is sponsored by My Patriot Supply. When emergencies strike, you always see news stories of long lines of people and empty store shelves. There's no need to be a part of that chaos and the possibility of having to deal with FEMA food lines. Those that know what's coming are using today to prepare. You should make a plan too. I have, starting with building an emergency food supply, and I trust and use My Patriot Supply. They're experts in emergency preparedness and have guaranteed 2-day delivery. Disasters won't wait. Why should you? Act now and save $70 on a 2-week emergency food kit when you go to my special website, preparewithx22.com. My Patriot Supply food kits last up to 25 years in storage and include breakfasts, lunches, and dinners. Order a few today and receive guaranteed 2-day delivery discreetly to your door. Take action so you're ready for what's coming and save $70. It's better to have and not need than need and not have. Go to preparewithx22.com. Click the link below. Hi, and welcome to the X22 Report Spotlight. Today we have a returning guest, Lior Gantz. Lior runs numerous successful businesses. He's traveled to over 30 countries in the past decade. He's an entrepreneur, an investor. He's the founder of Wealth Research Group, that is wealthresearchgroup.com. And I am very happy to have Lior back on the X22 Report Spotlight. Lior, welcome back to the Spotlight.
Hi, Dave. Thanks for having me.
Hey, thanks for being here. And why don't we just start off with the economy? Because here in the United States, we have seen the stock market move up to 28,000 points. Trump actually tweeted this out, letting everyone know that, yes, we finally did it. And actually, over the past year or so, the market has done very, very well. Now, I know this is not the gauge of the economy, and this has really had nothing to do with the economy, but I wanted to get your take on what you think the economy has been doing. I mean, we know statistically with unemployment, with the stock market, it looks fantastic. Do you think the economy can continue in this fashion?
What's happening with the stock market and what's happening with prices of bonds and real estate, it does have it is a derivative of the real economy, but it has a lot of the monetary stimulus built into it. In other words, without the Federal Reserve's intervention for the past 10 years, our economy right now wouldn't have been as it is right now. We cannot backtest and see where it would have been, but there are pros and cons to everything. What the Fed has done inadvertently or deliberately, depending on who you ask, is by way of slashing interest rates and creating the QE programs. They've done what other central banks have done for a couple of centuries, and that is basically to lower the borrowing cost for the richest and most aggressive and biggest corporations and governments, for them to create a trickle effect. But we have not seen the trickle effect at least until 2016 or 2017, and when we started to see it, it was very minimal, and then came the tax cuts, which for corporations, which really dried out the trickle effect again. So if you think about it, Dave, if you can imagine it and visualize it, think about the entire general population, 330 million Americans, and you can envision this globally, and then think about the banking system and the way that they operate. And then think about the Federal Reserve, the way it operates, and you'll see that what they do is that they allow a very specific group of companies and institutions to get cheap credit, to get very low interest rates credit. And then what they can do with it is whatever they want. But what they want to do with it is go for assets. Why go for anything more risky than assets when you know that somebody else is going to get cheap credit down the road in a week, in a month, in 2 months, in a year, etc., and will buy the asset that you're going to buy right now for a bigger price. It works with bonds, it works with real estate, and it works with the stock market. So essentially, you're creating an asset bubble by just releasing more and more cheap credit, and whoever gets it first buys an asset, buys stocks, buy real estate, buy bonds, and then whoever comes next, he has to bid this up a little further, and it just goes on and on. But the general population does not get access to these zero rates. In fact, if you look at most consumers, they are paying record high interests on their credit cards. They're not getting access to cheap mortgage loans, or the lending requirements are such that they cannot access them. And so we have not seen the trickle effect. You've seen the world's richest corporations and obviously their shareholders get stupidly rich. And this is the beneficiaries of what's happening. Underneath it, there's an innovation boom. There are things that are amazing. If you look at the world 10 years ago and compared to what it is today in terms of the efficiency, the effectiveness, and the access to incredible amounts of data and information and comfort, yes, the world has progressed amazingly. But the problem is the pie has grown, but the share of the pie on an individual basis has not grown in the same way. And for many people, it has not grown at all. And that's where the frustration is coming from. When you see that you are participating in the growth of the pie yourself, because you're working, you're toiling, you're sweating, you're producing value, but you see that your wages are rising with the pace of inflation at 2 or 3%, or where, however you want to judge inflation by using shadow stats or whoever else, and you're seeing my share of the pie is not coming in. And that's the problem right now. That's why there's such an issue and talk about whether or not America is a capitalistic country, whether or not capitalism is broken, and should we move to socialism, should we tax the rich, etc. This is all because of the central bank's monetary policy, which was not accommodated by any restrictions, by any laws, by any rules that would mandate some of that money to go into the general population, to go into productivity and other things. Because if you don't have any restrictions on that, then what you see is corporations would tend to buy back their own stock instead of investing in R&D, which is risky. The R&D, you can invest billions in something and nothing pans out. Whereas if you buy your own shares, that is almost a guaranteed win for the management and for shareholders. We've seen monetary policy without the accommodating fiscal policy from government to create that fiscal effect, that trickle effect, where the entire population is generating a benefit from what's happening. And that is the real issue. So we have a real economy that's growing at about 2.5%. And with a country like the U.S. that is growing in terms of population by about 1%, that is actually really good for such a rich country. That means that in about one generation or 25 years, the average family would have about $75,000 worth of stuff that they don't have today. So it's real growth and real wealth. But if you look at what the individual is thinking when he opens up his eyes and says, "My God, look at all this wealth and all this money that everyone else has, and I don't. Why am I not getting my piece of the pie?" That is a direct product of what's happening with the Federal Reserve and other central banks. And now what is likely to happen is that they'll go to the extreme the other way. In other words, central banks will continue to do whatever they've done up until now, but now the government will come in and stimulate with fiscal policies on their side. And the idea there is to include much more of the population. But the problem with that is that they can do it in such a way that is only designed for gratification on the short-term basis, and it will create mountains of new deficits that down the road, and that could be in a few years' time, Dave, you will see incredible write-offs. In fact, the institution that looks at this, the International Institution for Finance, has said that in 2008, and this is 10 years back, the subprime mortgage crisis has wiped out about $9 trillion worth of equity. If you look at the corporate debt and the government debt of today, they said about 40% of it is at risk, and that means about $19 trillion. So they're basically saying what we have on our hands is twice as big as 2008.
But isn't this a flaw of the central bank? I mean, if you look at the IMF and they put out their reports and they say, oh yeah, the global economy is slowing. And then you look at the amount of debt that's out there. And then you look at the United States and you look at the amount of debt. And if you look at all the other countries and you look at all the debt, doesn't this all come back to the central bank system and how it's designed? Because we're always going to have debt if we're under a private Western central bank. Because if they're loaning us, I'm not saying each one of us, but loaning the government's currency, there's always an interest attached. Don't you have to get rid of this?
First of all, in Europe and in Japan for many years, there's been negative interest rates. So it's not just that the central bank's system is flawed, because it is flawed. It will always be flawed to some part of the population. Some part of the population will always benefit from it, and the other part will always be damaged by it. The problem is that the benefactors are such a small part of the population, whereas the general population just is always going to be damaged by it, because when you contract credit, the rich are cashed up, whereas the general population gets laid off and they have no savings. They need to liquidate their whatever they have in assets, and then the rich come in and they bid for these bargain assets. That's exactly what happened in every crisis that the central banks have quote unquote created by contracting and unleashing credit, and that is the real problem. There's always going to be a transfer of wealth between the rich and the poor, as long as we're under a central bank system, especially on a fiat monetary system. So if you're asking me if it's flawed, it is absolutely flawed. And the problem with it is not only that it's flawed, but it's unfair. And but the problem for people like you and I, or the listeners of this show, is that most people just do not care about these subjects at all. And therefore, we do not have the inertia and the amount of people required to change this system. And that is sort of the paradox of the enlightened. So you know in theory much about this subject, but you have not the power to change it. So what do you do? How do you live inside of this system? And then you need to make personal choices. Do I adapt to it? Do I antagonize myself to it and basically sacrifice some of my prosperity because I don't want to live in a corrupt system, etc. And that is obviously personal choice of every person. But yeah, the problem is that the system is too large to change with a very unenlightened population, because most people just do not know about these things. And even if they know, they don't have the brain capacity or the mental capacity or just the energy to get involved in this. And that's a problem. And therefore, what you usually see is that the government will come in and they will give the population, some short-term fixes, which will not get to the root of the problem and will not change it. And that's why I personally always advocate, responsibility on the individual level. That's why I founded Wealth Research Group, the newsletter, because that's all we do there. That we do independent research about investments and about the economy. We publish the information all the time because I believe it comes down to whatever you do yourself, because you don't need to sacrifice your own life, your family's prosperity, because you were born in the 20th century and you're in the system that is obviously unfair to the average person.
Now, you mentioned negative rates, and we know the ECB, they're negative, and out in Japan. And here, Trump continually pushes the Fed to go to negative, or actually just cut rates. He might be talking about negative rates. And the Fed has been cutting rates. Now, what's very interesting is that the mainstream media, they had stories out there saying that if you continue to cut rates, you'll bring the economy into a recession. And we've seen the Fed cut rates all throughout 2019, and now they've come up and they said, listen, we're done cutting rates. We're not going to cut any more rates. We feel that the economy is equalizing. Do you think they're done cutting rates? Do you think it's done while Europe and Asia, they're in negative territory?
So if you go to wealthresearchgroup.com/enemy, we wrote an extensive report about this conflict between Washington and its own desires and the Federal Reserve and its mandate and its desires. Because unlike the Bank of Japan, the Bank of China, and the ECB, which are very much political entities, the Federal Reserve in the United States is independent of government. And what it does, it creates a conflict at some point between the central bank and the government. This has been going on forever, but with all administration, including the Nixon administration, if you know the history of the Nixon shock, he actually called the Fed chair and he said, slash the rates completely unless you want to have a recession. When the Fed chair said no, then came the end of convertibility to gold in 1971. So what Trump is doing is he's taking the debate public onto Twitter, etc., which other presidents chose not to do before him. But Washington, if you look just at the United States and say, okay, I am Washington, I have insufficient tax receipts every year. Every year I am going to be in deficits for the rest of this nation. Under the current way that it operates, I will always have more unfunded entitlements every year because of the boomer generation, and because of my defense spending, etc., and my all the top items on the expenses sheet, and I don't have enough income coming in. And therefore, if I can cut on my interest payments, which are now about $1.6 billion a day or $500 billion a year, if I can cut that to zero, then I'm saving taxpayers $500 billion theoretically. So why not cut it to zero? But then you look at the unintended consequences of cutting the interest rates to zero on the world's reserve currency, because it's not just a national currency, it's the world's reserve currency. Then that's what the Fed needs to think about. So for Washington, for DC, just think about yourself personally. If you can go to a bank and say, hey, I want my mortgage interest free, of course, it will be the best thing you can do. But for a government, it is not the same thing. And for an economy, it's not the same thing. It creates all sorts of problems. And that's when we get into the argument, the initial argument, whether or not it should be a group of governors that dictate the interest rates for the United States and for the rest of the world, because this is a reserve currency, or should it be a free market economy where the United States government will have to fight with other governments for the lending of the public, because it is the public and institutions and other countries that lend to each other. So it's a very intricate system, and for the Federal Reserve to cut rates further, it's extremely difficult, extremely complicated, and I don't think that they will meaningfully cut rates for three reasons. One, and we wrote about it at wealthresearchgroup.com/epic, we are going into an election year. And in an election year, the Fed tends to sit quiet. It doesn't want to appear political. It doesn't want to hike rates substantially. It doesn't want to cut rates substantially. It doesn't want interest rates to be part of the political campaign of anyone. They don't want to seem like they're Democrat or Republican in this environment. Obviously, they don't want to seem like they're Democrats, because obviously we all know about the friction between them and the Fed, between them and Washington anyways. So that's one thing. The second thing, the markets do not want lower rates. The stock market wants or investors want to know that the Fed has enough ammunition if something goes bad to keep cutting rates. For it to cut rates now, it signals to the market that in a downturn or in a slowdown, there are few tools for the Fed to keep cutting, and that's problematic. Actually, the markets, the indices, the S&P 500, all stocks can start to sell off if they continue to cut rates, which is very interesting, because that's obviously counterintuitive to what many people think. But so that's the second thing. They're risking that the markets will not like cutting further rates. And the third thing is that the dollar is the reserve currency of the world, and for it to trade, for the government to reach a point where the Fed's fund rate, which is the overnight lending rate between banks, it is not the directly the Treasury interest rate that the United States government has to pay, but it does affect it a lot. For it to go down further, you are changing everything else. In other words, you are making the euro more attractive and other currencies more attractive. You can weaken the dollar substantially. Weakening the dollar substantially has other impacts on corporations. So it is a huge mechanism, and therefore the entire argument in the first place, Dave, is that no one can manage it and control it better than the collective consciousness of everyone, the free markets just operating. But that is not going to happen. This is not the system we're on, and we're not going to. This is not something that's even being debated in the public sphere. Nobody is pushing this topic ahead. Even 2008, which I thought, my God, this is the greatest opportunity for the American people to take back their financial freedom, to take back the Constitution, and they did not. So I do not see it happening unless there's going to be a major downturn. And that's why I personally just adapt to what's happening and try to figure out how I can participate in this in the most beneficial way for myself, my family, obviously for readers, and live in this world with all the things that are happening.
So why do you, I mean, you're saying, you gave us your 3 points here, but Trump met with Powell and they discussed rates. They actually discussed negative rates, and they discussed the economy. Do you think that Trump had him to the White House to tell him that, listen, we need to go lower?
I do think so. I do think that he wanted to go lower. He's publicly saying that he wants zero rates, and there's a big incentive to it, to cut about $500 billion a year worth of interest payments that America pays its creditors. But for Chairman Powell to decide on that it's a major decision. If you cut rates further, and all of these companies and a lot of the government debt gets refinanced at lower rates, if you jack up the rates again to more normalized rates like 2.5%, the interest payment on those becomes such that many corporations and indeed the government can default. Now the government can print and do many things that corporations can't, but lowering rates and means that all these CEOs are going to refinance, and then when you jack up rates, you're killing them. And that's what happened in December of 2018. That's why the market came down 19% in 1 month. And the reason was that the Fed tightened. And think about what they did. They only tightened to about 2.25% on the Fed's fund rate, but that killed the entire economy. In other words, we are never going to go back, and you can quote me on this, we are never going to go back under this current fiat monetary system to higher or normalized rates again. We are going to stay at this level until it either gets there's either a major jubilee where governments negotiate with each other major write-offs, because I don't believe that any government will touch its entitlement programs. So it's either going to be the creditors that take a giant haircut. I mean, in the tens of trillions for companies and for governments to clean their balance sheets, or we're going to go into some sort of a catastrophe. And I'm not talking about 1 month from now or anything that's dire and catastrophic, but it is something that you have to take into consideration. There will be some event that is going to be cataclysmic. We just don't know when it's going to happen. So the best thing you can do is to make sure that you always have the type of assets that can withstand this, that you always have the breathing room. And we wrote about this in wealthresearchgroup.com/reset, like what to do in terms of the reset. And my personal position with precious metals and how I deal with that. And I have other protection assets. These are not non-producing assets. These are not assets that are built for cash flow or for enhancing my wealth. They're built for to create what I call uncorrelated bets, and therefore, in times that are problematic, you have parachutes, because there's just no other way to live without them right now. There's so many uncertainties.
Now, you said that a crisis would maybe wake the people up. Now, in 2008, you said, you thought it would be then. You thought 2008, 2009, but nothing happened. Now, Trump, for many months, probably over a year now, he's been telling the country that the Fed is worse than China. The Fed has no idea how to run the economy. The Fed is clueless. The Fed doesn't understand the economy, and they're the problem. Do you think he's educating the people, letting them know that when we enter this next crisis, that is the problem? It is the Fed.
I do. For the main reason he's doing it is because it makes it easy for the government to introduce their own plans, the fiscal plans, stuff like an infrastructure program, things like government partnership with companies where they're already doing it. These are called special opportunity zones, where they incentivize the biggest banks, the biggest construction companies, etc., to build factories in areas where there's more crime, distressed zip codes, where they can get people to come back into the economy, to come back into 21st century occupations, etc. So they're already doing it, but they're not doing it to a large extent. And that's what I think he's preparing the country for. It is definitely not the American way in terms of the fact that you want to reduce government as much as possible, scale it back, and let entrepreneurs and innovators run the show. I'll give you an example of this. They just so people can understand this as well.
Okay.
When about 20 to 30 years ago, a Coca-Cola can had 80 grams of aluminum in it, or I don't know how you translate it to American weight standards, but 0.15 pounds, I think would be that. And now it has 13 grams of aluminum in it. The government did not do anything about this. This is the private markets trying to figure out how to become more effective and how to become more profitable. And now a can of Coke weighs about a fifth of what it used to about 20, 30 years ago. And in the process, you save so much money and you save a lot of resources and everything like that. Just think about your house. Just think about the amount of music that you listen to today, for example, on YouTube. If you had to store all that music physically in your house, and CDs and records, etc., if you had to look inside of your phone and see everything that it can do and go back 20, 30 years ago to do the same functions, you would need to have a camera, a computer, a calculator, etc. The free markets are the best innovators. The private enterprise system, the way that people can get up and think about how to innovate, how to become contrarians, or how to mimic other people's successes, that has brought America and the world everything that's great about it. The innovations. When you try to control reality by moving people around, or interest rates around, or anything around like it's puppets, then that controlled system, that centralized system, has failed for so many reasons, but for the most fundamental reason that it does not incentivize the world the way it should be. We're all individuals, and the best way you can do it is to stay out and let innovation figure it out, and that's not happening. So I think what will happen, because I've never seen, apart from when America was incredibly innovative and having the boom years under the gold standard, by the way, between 1875 and 1913, when the Fed came in, that was the most philanthropic period of all times. It was a time of amazing deflation. In other words, things became cheaper and cheaper while GDP grew and grew. It was an incredible time to be in America, because your life every year was getting cheaper and cheaper and more effective. And you did that without income tax, by the way. So, but besides those special periods, I always see in history times when there's so much conflict like there is right now, the government is, I don't know if it's forced, but you can see it yourself. There's so many people that are asking the government to solve the issue. So many Americans would like the government to solve the issue, whether it be Trump or a Democratic candidate to solve the issue. And some of these solutions that they are raising are, they're so cheap. They are applying to the most common denominator: free stuff, free healthcare, free this, free that. When obviously it's not free; it's subsidized by either deficits or taxes. And
right,
if
somebody's paying for it.
Exactly. I mean, you need to pay the doctors, the teachers, the everything else, whatever you want to finance here. So you're either financing it with deficits, which means you're financing it with inflation and wherever else, or you're financing it with taxes, and you need to raise taxes on somebody. So it all comes down to the fact that what has happened in the last 10 years is that the wealthy and the institutions, the elite, have lived well beyond their means. In other words, they've extrapolated cheap debt from the future, and that's going to really hurt asset prices going forward, because you cannot continue to lower interest rates forever, and that is what has made everything expensive. Real estate is expensive. Stocks are expensive. They're not in a bubble, but they're expensive. They're just expensive. And bonds are expensive. Everything around you, most of the things around you are expensive. And that is the world that they've created. And now they have to think about ways to unwind that world. And it's truly complicated. And that's why I believe a lot in diversification. And you can see that commodities have been brutalized by this sort of world of low inflation, low growth. The only commodity that's really flourishing is gold, and that's the only one that's really not industrial. Its price is predicated on interest rates and geopolitical things, and not on supply and demand and all that kind of stuff. So that is what makes gold unique in its own right. And that is what has gave birth to Bitcoin and cryptocurrencies, and why they're worth, who would have thought one Bitcoin would be worth $10,000? It's an incredible notion to even think about. And then you see prices around the world for things, for assets, for everyday items. You don't see major inflation, and the reason you don't see major inflation for everyday items is because there is no trickle effect. Think about all the wealth that is concentrated at the top. It's not going to buy foods. The billionaire is not going to go and buy twice as much food as he used to. So if you don't have a trickle effect where the general population can go out, spend more, invest more, etc., you're not going to have velocity of money. You're not going to have major inflation. And that's what the Fed has been fighting for years. I don't know why they want it. Why they want higher inflation, but that is the reason they can't achieve it. It's because all the money is concentrated with such a small amount of the population that what they do most is not spend. They already spend as much as they need to spend, and the rest they either park in cash or invest. So whatever the monetary policy is, whatever the central bank's policy are, that is not what's going to help to change everything. It's for 10 years, all they've done is made assets more expensive, which is good for whoever has most of the wealth anyways coming into this recession in 2008. And for the rest of the world, this has been a huge issue. Think about the average person who, in a real world, in a normalized world, if corporations and governments would have needed money, they would have needed to come to the saving power of the general population. Then you would have gotten 3 or 4 or 5% interest on whatever you have in the bank, not zero. Either that, or corporation would have had to pay a lot more in wages to their employees, because they would needed to innovate and not just buy back shares all the time instead of pay higher compensation and incentivize workers to work more, innovate more, etc. So this is all working against the general population, and that sucks. And that is the reason why there's so much populism around the world, and that's why you might see where in the near future, like in the next 4 years, the government's really becoming aggressive and trying to solve it by redistributing wealth and infusing stimulus to the general economy.
Now, you mentioned all this, and the central banks, they must be getting nervous because we have a huge amount of debt. Their system is not working. We're at negative rates. And like you said, they're not going to be able to raise rates. It would destroy everything. And the Dutch central bank is out there saying, listen, if we have a problem in the global economy, you're going to have gold. And it's very strange for a central bank to come out and tell people that you're going to need gold. And then they went ahead and they took their gold and they placed it on a military base for safekeeping. Do they know something that we don't? I mean, why all of a sudden do you think they came out and said you should have gold and then they moved their gold?
Well, sure. Look, in Europe, these Western European countries like the Dutch, they have a very rich history with gold. The Dutch actually were the biggest empire in the world just a few centuries ago. For such a small country, they were able to create miracles for their own economy. They were the reserve currency of the world for about 80 to 90 years. And so they know a lot about international affairs, stability, etc. For European banks and for a central bank in Europe like the Dutch to say something to this effect and to move their gold, they're telling you, look, we are going to transition, which other countries are doing as well. They're, Russia and China are de-dollarizing and they're buying a lot of gold. The function of gold is how to become independent of risk from other governments. That is the main reason to own gold. It's an internationally accepted currency that has nothing to do with any country. And so if there's distrust between countries, if there's a peak in globalism, which you're seeing right now with tariffs and everything else that has to do with renegotiating trade around the world, then gold is a very good solution as a non-performing asset. It's not something that creates any yield or any cash flow, but as a non-performing asset. So in other words, as something that replaces your cash savings. If you take, if you have $100,000 in fiat currency and you want to diversify it into other forms of currency, of money, then gold becomes a great solution for most countries which have a lot of dollars. That is a great solution. They do not have any silver reserves anymore. And so for governments, that is the main hard asset reserve, gold. That's why you see an 85-to-1 ratio with silver, because governments are just not buying silver. So gold has become the only game in town when it comes to how governments diversify out of fiat currencies. Now, for the average person, silver is much more attractive, much more cheap and discounted, and it serves the same function as gold for the average person. So if there's a rush, if there's inflation that's going to come, you'll see silver closing that gap real quick to gold and go back to 50-to-1 or 40-to-1, even 30-to-1 in its peak in 2011. But for the time being, I've taken my lifestyle burn rate. In other words, the amount of money that my family unit spends in 1 month, I multiplied it by 24, and I converted that amount of fiat currency, in other words, 2 years worth of my expenses, into physical gold and physical silver. The reason I did that is because I projected or anticipated that, hey, if there's a 2-year global meltdown that is very hard to get out of, then I have enough precious metals that I can convert into whatever it happens to be, and I can do that. Now, there's no drawback to this. In other words, there's no downside to it, because the other action that I would have taken, Dave, is to simply hoard 2 years worth of cash. In other words, it would have been always cash or precious metals or something that's very liquid and less volatile. So it is a very easy decision to make as an investor to say, I want to have security. I don't care about the price of gold. I just want 2 years worth of today's purchasing power, which if inflation picks up, the price of gold will rise, to accommodate that. So you will always have 2 years worth of purchasing power, no matter which kind of world you live in. That's the idea behind gold. Sometimes gold goes into a bubble and becomes even more than 2 years. So you're actually making money on gold. And we talk about that in wealthresearchgroup.com/gold playbook, which is where we analyzed every asset that you can invest in with gold or silver. You talk about from paper instruments to mining stocks to everything else. So, for me, gold is always something that I can, at the end of the day, think about how I'm protecting my family and how I'm getting ready for whatever happens. And I say, oh my God, I have a lot of precious metals in physical form, and I like that fact.
Where do you think gold is going to go? I mean, a lot of people have predictions by the end of this year it was going to hit 2,000, and here we are. It's below 1,500 now. What do you think is happening with gold?
So gold bottomed in September of 2018 at around 1180. The last time it bottomed, and it had a great run in from that point on. Hit about 1550 in late August, and then the Fed said, "Look, we're not going to cut rates anymore." So for gold, cutting rates is obviously an important gauge of where it's going. But they also said we're not going to hike rates. So you're at a point where gold is sort of trying to find its new equilibrium, where what's the right price for it as compared to other things. In other words, Dave, when you think about gold, you should always think about the alternatives to gold. What can people, governments, etc. buy instead of gold? And if there's other attractive things, then they tend not to buy gold because it's non-productive. But if the risk profile of other assets is such that they want to diversify into precious metals, and the conditions are accommodating to that, then there's a large bid for it. And it's such a small niche that if there's a lot of people that want to buy it at the same time, you see it go on these great runs. So for the time being, this sort of a price where the oil price is about where it is, gold should not rally big, because the price of mining it globally is about $1,200. So the miners are definitely incentivized to keep mining it. There are some supply constraints. In other words, there's a lot of mines that are getting depleted. But as you know, the supply of gold above ground is all the gold that has ever been mined is above ground right now. So the gold is unique in terms of that the supply is always there. It's what's driving it is the demand. So I don't think that gold has a lot of wind at its back to make a giant rally, but I do think that in the years ahead, if we stay as we are, and then fiscal policies come in other words, the government comes in and stimulates the general economy, and you see a lot of the trickle effect coming in, where people's wages are going to start rising, and when they have more spending power, and the government does more to give the average person more discretionary income, I do see inflation starting to pick up again. You would see the entire millennial generation, which is bigger in size right now than the boomers. They will start to create their family units and start buying real estate, which they've postponed thus far, but they're in their 30s right now. They're going to become parents. They're going to start spending on much more than they have up until now. And I think inflation in the next decade, the 2020 to 2029, will shock a lot of people, because we've seen stubbornly low traditional inflation, and I think that is about to change radically. So that is a major thing going into the 2020 to 2029 decade. So I think for gold and just commodities in general, if you Dave, if you Google the TSX Venture, which is the most is the Toronto Stock Exchange, and it's most correlated with mining and commodities, it has been on a bear market since 2007 with two abrupt rallies. One rally from 2009 to 2011 when the world was convinced that the QE programs will create major inflation. And that was the time where gold came and touched 1900. And then in 2016, for about 8 months, when the markets were correcting and a lot of people were short covering and the price of gold exploded. And with it, the TSX exchange, so the Toronto Stock Exchange. But if you look at it, the Toronto Stock Exchange, which represents Canada as a whole, has gone down 84% since 2007 till 2019. This is a major index around the world. It's in the trillions, and it's gone down 84%. So you can see that Fed policies and central bank policies, the world that they've created is a world where money is just getting transferred between the elites. If you can just think about it, the entire population is on ground zero. They're fighting for scraps, whereas 2 stories above them, there's all the cash that you would ever need, and they're just exchanging hands and buying assets off of each other and making themselves rich because the Fed is pouring more money into their floor, into the second floor. But that money is not trickling down to ground zero where people are doing the actual work, but they're not getting any bonuses or anything that is of significance. They're fighting for scraps, basically, when in the second floor there's a party. I don't know if I can illustrate it any better than that. And the government will now need to come in and punch a hole in the floor of the second floor so that money will start to come down to the general economy, to the general population. And that's why I think the price of gold will definitely reflect that change.
Lior, thank you very much for being on the X22 Report Spotlight. Once again, how can people see all your work?
The best way, either in the description box below this video, you usually detail all the links and the special reports that were mentioned on the show. Right. Obviously, you can go to wealthresearchgroup.com, which is the homepage of the website, and subscribe to the free newsletter. That's the best way to keep updated with everything that we're doing all the time. It's a mix of big picture economy and just updates on what's happening on the macro level, and also what I'm doing personally with my own portfolio. I detail a lot of my own personal trading. And then obviously in the website, you can go to the special reports tab on the top menu, and you can pick and choose among some incredibly valuable PDF reports for download, and it's definitely it's free for the public.
Great. I'll put all the links at the bottom of the video like I normally do. Lior, once again, thank you very much for being on the X22 Report Spotlight. I really appreciate it. Thank you very much.
Thank you, sir.
Everybody get your fucking hands up.